Hello, this is Leslie Taylor, the Profitability Strategist, and on this week's vlog, I will be discussing your business expenses and what's legal. What is a business expense? There are lots of folks out here in these entrepreneurial streets getting this wrong as far as what counts legally as a business expense. What does count legally as a business expense and what doesn't? This can be confusing for a lot of business owners, especially when tax time rolls around. In fact, I lost one of my very first clients because he had been allowed by multiple financial professionals that he had been working with to do things incorrectly. No one either paid attention or noticed or said anything. And what was at stake, of course, were his deductions, or so he thought. But what was also at stake was him owing IRS fees and penalties because he took deductions when he should not have. And I was not putting my name on that. We don't do that around here. Now, one area that gets most every business owner's attention, of course, is taxes. Nobody enjoys paying them, and everybody wants to maximize their tax deductions so they can pay less. Now, I'm all about that, but I'm all about doing it legally. So most of these business-related deductions, they start out as expenses of some sort. And so the challenge I found with small business owners is that many don't understand what really constitutes a true business expense, meaning something that needs to go on the book, and how to handle those items that don't go on the book but may be deductible. So let's talk about that. We're going to talk about that in this blog. In this blog, we're going to discuss what is and isn't a business expense and why this is important. As an owner, it's important to you, and you need to know because you're the one that's going to be responsible. It's your business. It's in your name. And so what I mean by that is what goes on the business's books, right? It's important for a lot of reasons, not just because the IRS might come looking, but also as you're looking to seek funding or investment or things like that. So I'm also going to provide some tips so you know, just in case whoever you might be working with, even if that's you, doesn't know or maybe they miss it. I want to help you to be compliant in this way because this can cost you money if you don't get it right. Now, while this is not an article on taxes, hopefully by clarifying what can and cannot be a business expense, you will be more prepared at tax time and less likely to create issues for your business should the IRS or any other entities come looking. As always, you should speak with a tax professional regarding your specific tax situation and what is allowable as a deduction. All right, let's talk taxes. Now, the first misconception that I find is that all of your business's tax-related deductions are going to appear on your books or on your financials, and that's not correct. What do I mean by that? A lot of business owners think that every single thing that's deductible, it needs to be recorded in their business's financials, and that's not true. That's not true. For instance, while I work out of my home, which we own, and this room within our home, it functions as my office, I can't include my mortgage. I cannot include my mortgage on my business's books. However, a portion of our mortgage expense is deductible. And so that documentation that's related to that deduction, I share it with my tax professional so the deduction can be taken, but it doesn't go on my books. So what is considered a business-related expense, right? What can actually go on the financials? Let's talk about that. What can go? First, operating expenses. The Internal Revenue Service considers operating expenses to be the cost of doing business. So these are the costs associated with running and maintaining your business on a day-to-day basis. And they include items like your rent or your mortgage payments. These are things owned by the business, rental of office space used to operate the business, or the purchase of property for operating the business. Again, both should be in the name of the business. You see a theme here. Wages and salaries, we're talking true employees, W-2 employees, business insurance, things like utilities for the rented or purchased property, depreciation, and those are assets that you own, equipment, things like that. They have a loss in value over time, and that can count as a business expense. Advertising, marketing, business-related travel, right? You get the point. Business-related things, there has to be a business purpose behind it, and it has to be owned by the business. Startup expenses related to starting a business are also considered business expenses, and those can be deductible, even if the expenses were incurred before you started your business. your business banking account. So keep the receipts and tally them down like in an Excel spreadsheet or something for later. The IRS allows you to deduct some of these startup costs. So these expenses are expenses incurred during the process of getting your business up and running. So some of the costs, for example, can be things like your business licenses and permits, right? Getting your EIN and getting all those things set up. Your consultant fees. Think working with a legal professional or a financial professional to help figure out how to set up your business before you fully, started operations. Another type of expense are direct expenses. These are also called cost of goods sold. So in addition to the operating and startup expenses, you can also deduct the direct costs associated with producing the goods or services you sell. These direct expenses are often referred to, like I said, as cost of goods sold. And those include items like raw materials used to make your products, supplies, services used to use directly in providing your service, for instance. So like, for instance, in my business, some of my clients, on their behalf, I may purchase financial software like Xero or QuickBooks. Those are considered direct costs. They are directly related to me providing that service for that client. And I purchase it on a per client basis. The cost of labor required to sometimes produce some of your products. So for instance, if you hire someone who is a contractor just to work on a specific project, then that's considered a cost of goods sold. Now, if that person's an employee or if they work with you on an ongoing basis, then that's different. That's a different situation. Maintaining and supporting business-owned assets, that's another area. That's another type of business-related expense that's often overlooked. And so it's the cost of maintaining and repairing the business-owned assets. I will say that again, the business-owned assets, because that's an area where people really get in trouble. So these expenses can include the cost of repairs and maintenance on vehicles, machinery, equipment, the cost of upkeep for office space, retail space, or other property that's actually owned by your business. So with all of that said, with all those different things, let's talk about actually tracking these expenses. So keeping track of the business expenses, it's important for two reasons. First, it's going to help you better understand how much you've actually spent, right? So you can determine whether or not you were profitable, which is what you're in business to do, of course. Second, it better ensures that you get to take all of your deductions, which I know you're excited about. Again, I'm trying to help you, and I know that you want all the deductions that you can get, because I know I do. Now, a few rules to follow are this. Make sure you have supporting documentation, receipts, invoices, who you spent the money with, the amount, the date, and business purpose. Don't include personal expenses. It seems obvious, but there can be a little bit of gray area or confusion around what's a personal expense. So for personal expenses, think lunches with yourself when you aren't traveling. That's a no. Think gas for a car that isn't owned by the business. That's a no. There may be, however, auto deductions that you can take from a tax standpoint, but speak with your tax professional and keep your records so you can provide them to your tax professional come tax time, but do not put them on your books. These are not considered business expenses, and it will not make the IRS happy if they should find out. So, also, expenses used for both personal and business reasons, that's a no. Think chef jacket and uniforms, yes. A dress for a business function, that's a no if you also plan to wear it to church, a month later. It does not go on the books. Now, I hope you enjoyed this vlog. I would love to hear what you think of my new format, my new vlogs. You can email info@ltaylorassociates.com. Also, to find out about additional resources or to learn how to work with us, check the links below. Stay profitable.